Good morning, good evening, good afternoon, wherever you are or whenever you are. Hello. Thank you for watching my videos. It's Mike. It's January 18th, 2009. I'm back in England. I've just returned from Hong Kong. Now, one of the things that I did while sat in Hong Kong International Airport was jump onto their free Wi-Fi and look at some news stories. Now, one of the news stories that I was reading yesterday, or earlier today, I guess, was quite interesting. It was in the Independent. And I thought this was so interesting, I recorded the URL. Now when I go and look at it today, unfortunately, I can't seem to find this article by the URL. Now I thought to myself, perhaps the Independent have modified the URL slightly, and I'll just do a search on the website. So I did a search on the website. Unfortunately, with the search, I couldn't find any record at all of this particular news story. It's just gone. I thought this was rather unusual. So I did a little Google search for this article. And evidently, the Independent has removed it from their website. The article, which I will read in full at the end of this video, is called "British Banks Are Technically Insolvent." Now, what is rather remarkable about this article is it goes on to explain that the Royal Bank of Scotland issued in a statement on Friday that Britain's biggest banks are technically insolvent. At the end of the article, there is a very interesting statement from the Treasury. Downing Street made it clear yesterday that the government remained committed to doing, quote, "whatever is necessary to help British businesses and families get through this global financial recession," end quote. The quote itself that says global financial recession is quite remarkable. However, the beginning of this quote, "whatever is necessary to help." Does this include censorship? Does this include removal of controversial news stories from prominent websites, prominent newspapers? Now, because of course I was traveling, I don't have a copy of yesterday's Independent, so I don't know if this actually made it to the print edition. But if it did, it wouldn't surprise me if this article in the print edition is blacked out. Downing Street, the leaders of the British government, don't want you to see this information. And it's easy to understand why. I've included a link on the side to the original Independent website. I've also included a link on the side to a Google cache of this page. So Downing Street, the next time you want to go and filter some newspaper articles, you might want to call up Google as well and say, please remove the offending article from the cache. And of course, the other thing you will have to do is then find any reference to this website out on the web and remove that also. So for instance, moneysavingexpert.com, also linked here, has some commentary in their forum pages about this. Now, moneysavingexpert.com is a very, very popular investment and finance website here in the UK. It's very telling. One of the comments on this particular article states the following: "In a sense, every bank is technically insolvent and always has been." Well, that's not entirely true. At one point, banks actually had enough assets to cover all of the particular credits they had to give out. "Insolvency is not being able to pay your debts when they fall due. The bank invests most of the deposits for the long term, i.e. in mortgages, and has a small amount of liquid assets. Because of this, if everyone tried to withdraw their cash, the bank could not pay all the depositors. Technically insolvent. This is why runs on banks by half the customers mean they go," cover your children's ears, people, "tits up." Right. Don't let them do this. I am going to read the entire article, just in case they manage to delete the article from Google Cache in the next few days. The message here, basically, folks, is the government does not want you to know this stuff, and they're going to go out of their way to make sure that it doesn't create any panics. There's no point, folks. There's no point, Downing Street. People out here already figured this out. Now, I'm not trying to incite anyone to get crazy, okay? And the fact that I've put this video up may well flag me up to the to the government. Oh my gosh! There's this madman out there in Reading. He's doing nutty things. He's telling people the truth. Better go shut him up too. Alright. My regular viewers, thanks very much. Peace, love, understanding. I'm going to read the whole article now. The article is by Ben Russell and David Prosser. Britain's biggest banks are technically insolvent, Royal Bank of Scotland said yesterday, as the global banking industry was rocked by another day of turmoil, including the announcement of $23 billion of new losses from Merrill Lynch and Citigroup, the giant U.S. institutions. Analysts working for RBS, one of several British banks to have received emergency funding from the UK government last year, told the City that domestic UK banks are technically insolvent on a fully mark-to-market basis. The warning does not mean British banks are about to go bust, because the assessment is purely theoretical, and RBS said the position was not unusual at this stage in the economic cycle. However, it will add to pressure on the government to provide more support for the country's banks. Treasury officials are now set to spend the weekend in talks about a fresh round of measures, which could be unveiled as early as next week, to free up lending to households and major corporations hit by the credit crunch. The value of Barclays fell by a quarter in stock market trading yesterday, amid a series of wild rumors about its finances, although the bank said it saw no need to comment on the drop. Its board said in a statement last night that it knew no justification for the fall. The statement said next month the bank expected to report that profits before tax for 2008 were well ahead of the £5.3 billion forecast by analysts. City analysts said the bank had been targeted by traders after regulators lifted a ban yesterday on short selling of financial stocks. Barclays' share price, along with the value of other British banks, was also hit by dismal news from the international markets, including the announcement on Thursday night that the Irish government was nationalizing allied Irish banks. In the US, Bank of America announced yesterday that it was taking a $20 billion injection of emergency funding from the US government, subsequently revealing that Merrill Lynch, the investment bank it rescued last year, had lost more than £15 billion in the final 3 months of last year. Citigroup, once the world's largest bank, announced more than $8 billion of losses for the final quarter of last year, and revealed plans to split itself in two. Treasury officials were still discussing plans to help British banks last night, but the proposals are likely to include up to £100 billion of new guarantees for the wholesale markets that underpin mortgage and other loans. Other possible measures being considered include state support to help Britain's largest companies raise their own funds. Another option is to launch a bad bank to remove tainted assets from the bank's balance sheets. Although while this policy is under consideration, it is thought to remain some way off. Other proposals include ring-fencing the toxic assets within bank balance sheets. Lord Mandelson, the business secretary, has also talked of easing the terms of the government's £37 billion bank bailout in order to kickstart lending. Downing Street made it clear yesterday that the government remained committed to doing, quote, whatever is necessary to help British businesses and families get through this global financial recession. End quote. The next time you want to try and get rid of some truth, make sure you get rid of every trace of it. And if that means knocking down my door and dragging me off to jail, fine. But don't be messing about like this. Peace.